Hi everyone. Welcome back to Positioned.app. Before we dive in, make sure to follow, subscribe, and join us for free at Positioned.app for more concise and practical insights on swing trading and technical analysis. In our previous video, we built the complete breakout trading framework, the 5 pillars, from consolidation and resistance identification through entry mechanics, stop-loss placement, and risk-reward discipline. Today, we apply every part of that framework to a real chart. Before we break down the setup, this is exactly how traders can analyze breakout structures directly inside Positioned.app. From the dashboard, simply select a stock from your watch list and open the full-screen chart. The expanded layout gives you a clean, distraction-free environment to study price structure, resistance levels, volume behavior, and breakout timing with precision. What you are looking at is Tesla's 1-hour chart across the month of August 2025, price ranging from approximately $303 to $356. You will see the complete breakout cycle, the setup forming, the signal confirming, the trade executing, and the exit completing. Step by step, exactly as the framework intends. Before we move to the chart, let's anchor the 5 pillars of a high-probability breakout. Pillar 1. Defining the key level. A meaningful resistance level is tested repeatedly, 3, 4, or more times, without breaking through. Repetition builds significance, and confluence strengthens the level. Pillar 2. The consolidation pattern. Before most breakouts, price compresses into a recognizable structure, such as a rectangle, ascending triangle, pennant, or cup and handle. These patterns signal that supply is gradually being absorbed. Pillar 3. Volume analysis. Volume confirms intent. Activity often contracts during consolidation, then expands sharply on the breakout. As a guideline, breakout volume should reach roughly 1.5 to 2 times the recent average. Pillar 4. Time frame alignment. Breakouts on higher time frames carry greater weight. Institutional capital operates primarily on daily and weekly charts, so aligning with those timeframes improves probability. Pillar 5. Relative strength in market context. The best breakouts occur in leading stocks, within strong sectors, and in supportive market conditions. Together, these 5 pillars form the framework for evaluating breakout opportunities. Now, let's see how they appear on a real chart. Before we zoom into any single moment, let's read the full structure context before detail. This is Pillar 4 in practice to understand the broader picture before isolating the signal. This is where multi-timeframe analysis becomes critical. Inside the full-screen chart, traders can instantly switch between 1-hour, daily, and weekly charts to align short-term setups with the broader trend. Zoom controls and customizable intervals make it easy to move from macro structure to precise execution levels in seconds. Professional traders rarely analyze a breakout on a single timeframe alone, as context drives probability. Looking at this chart left to right, 3 distinct phases emerge. Phase 1. Rising base and first surge, August 1st through 13th. Tesla opens the month near $309 and grinds higher through the first week, rising lows, moderate and unremarkable volume. Then on August 8th, a first surge pushes price from $321 up to a high of $330. It is a meaningful move, but price stalls. The following sessions, August 11th onward, push higher still, reaching $340 on August 11th and $343 on August 13th. This is momentum, not a breakout. But notice the rejections. Price cannot sustain above $340 to $344. It retreats. A ceiling is being defined. Phase 2. False start, compression and the critical low, August 14th through 21st. After failing to break above $343, Tesla enters a compression phase. Price oscillates between rising lows around $329 to $330 and a flat ceiling near $340 to $344. Volume contracts through mid-August. The range narrows. Then on August 20th to 21st, a sharp shakeout drives price to a month low of $318 on August 21st. This is where pillars 1 and 2 are fully constructed. An ascending triangle structure begins to develop against a defined resistance ceiling. Phase 3. The confirmed breakout and distribution, August 22nd through 29th. The confirmed breakout arrives on August 22nd, extends to a peak of $353 on August 27th. Then distribution begins, sharp selling that pulls price back to $333 by August 29th. The full cycle is on this chart. 3 phases, 1 qualifying setup. Let's build the case pillar by pillar. Let's zoom into August 11th through 21st, the phase where the setup assembles. 2 pillars to confirm here. Pillar 1. The key level. From August 11th through 14th, Tesla makes 4 consecutive attempts at the $340 to $344 zone. August 11th reaches $340 before closing at $339. August 12th pushes to $343. August 13th reaches the absolute high of the period at $344 before pulling back to close at $339. August 14th, tries again to $342 and fails. 4 tests, 4 rejections. The market has shown, repeatedly and clearly, that sellers are entrenched at this level. That repetition is precisely what Pillar 1 requires. The $340 to $344 zone is your key resistance. Pillar 1 confirmed. Pillar 2, the consolidation pattern. Let's look at the lows. The August 8th low was $320. By August 15th, the low was $329. By August 18th and 19th, lows are $330 and $329 respectively. Connect those lows, and you get a rising trend line, a floor that is gradually ascending, while the $340 to $344 ceiling stays flat. That is the ascending triangle. Volume contracts visibly through mid-August, confirming the compression is genuine. Then on August 20th to 21st, the market delivers the shakeout. Price drops to $323 on August 20th and reaches the month low of $318 on August 21st. This flush clears weak-handed positions and resets the base for the breakout to come. Pillar 2 confirmed. As the setup develops, the full-screen chart allows traders to layer additional confirmation directly onto the chart. You can apply indicators like RSI, MACD, VWAP, Bollinger Bands, or volume-based tools to evaluate whether momentum, participation, and trend structure support the breakout thesis. The goal is not to overload the chart, it's to build confluence systematically. Now 2 pillars are confirmed. The setup is identified. We now wait for the signal. The shakeout on August 20th and 21st is where traders without a framework exit. Traders with one recognize it for what it is. Over those 2 sessions, Tesla drops from $330 to a low of $318 on August 21st. This is a liquidity sweep. Price dips below visible support to trigger stop-loss orders and flush weak-handed positions before the actual breakout begins. The ascending triangle remains structurally intact. The $340 to $344 resistance ceiling is unchanged. The shakeout gives us our stop-loss anchor, below the August 21st low of $318. Now, on August 22nd, Tesla opens at $328 and surges. By the close, the candle has driven price to $340, closing just above the prior close resistance cluster of $339 to $340 established by August 11th, 12, and 13. The breakout close is confirmed. We now assess the 3 remaining pillars. Pillar 3, Volume Analysis. Look at the volume bar on August 22nd. It is one of the tallest green bars in the chart, significantly above average. This is the sequence described in the previous video. Volume contracting through consolidation, then a significant surge on the breakout candle, confirming institutional participation. At least 1.5 to 2 times average, that threshold is met and exceeded here. This is institutional capital being deployed. Without this volume confirmation, the close at $340 would warrant caution. It barely cleared prior highs. With this volume, the breakout is validated. Pillar 3 confirmed. Notice how the breakout volume expands aggressively on August 22nd. Inside Positioned.app, traders can monitor this in real time, while also using the integrated watchlist panel to rotate through multiple breakout candidates quickly, similar to how professional traders scan markets during active sessions. This allows traders to compare relative strength and identify where institutional participation is strongest. Pillar 4, Time Frame Alignment. On the daily chart, Tesla is trading above its 50-day moving average through this period. The S&P 500 is in an established uptrend in August 2025. We are aligned with institutional timeframes, not fighting them. That alignment provides the structural support that sustains breakout moves. Pillar 4 confirmed. Pillar 5, Relative Strength and Market Context. Through the August consolidation, Tesla held up constructively relative to peers. On August 22nd, the broader market is cooperative. The CMT Association curriculum emphasizes the best breakouts occur in leading stocks, in leading sectors, in bull market conditions. Those conditions are present. Pillar 5 confirmed. All 5 pillars are cleared and confirmed. The setup qualifies. Now we execute. Before a single share changes hands, 3 questions, in sequence, every time. Entry. The breakout close on August 22nd is $340. The conservative entry, waiting for the next session open, means August 25th, which opens at $342. That is our entry. Alternatively, the retest entry waits for a pullback toward the $340 former resistance, now acting as support, the role reversal principle from our previous video. Either way, we are entering in the low $340s. Price target. We apply the measured move from our previous concept video. The consolidation height, from the August 21st structural low of $318 to the resistance ceiling at $340, the range is $22. Added to the $340 breakout level, the measured move target is $362. However, we must be honest, price reached a peak of only $353 on August 27th, the move never achieved the full measured move. We set T1 at $350, a round level reached during the August 25th to 26th advance, and note that the full target of $362 was not achieved. Stop loss. The stop goes below the August 21st structural low of $318, the confirmed shakeout floor. We place it at $316, providing a small buffer below the session low. If price breaks below $316, the breakout has failed, and we exit without hesitation. This is where the full screen chart becomes especially valuable for execution planning. Using the crosshair tools, traders can measure consolidation ranges, calculate breakout targets, estimate reward to risk ratios, and define precise stop-loss levels directly from the chart itself. The framework becomes measurable, not emotional. Risk management drives position sizing, never the other way around. At $26 risk per share and $500 maximum risk on a $50,000 account, that is 19 shares. Professional note, reward to risk on this trade. As mentioned in the previous video, professional practice typically requires a minimum 2-to-1 reward to risk ratio. With a $26 stop and a peak move of $11 to $353, the maximum achievable RR on this trade was approximately 0.421, well below the 2-to-1 minimum. Even at T1 of $350 plus $8, the ratio is 0.311. This is an important real-world lesson. A technically valid setup, all 5 pillars cleared, does not automatically produce a tradable RR. A trader applying the full framework would note the wide stop driven by Tesla's 1-hour volatility, calculate the RR before entry, and, strictly following the concept breakouts rules, pass on this trade or significantly reduce position size. The framework protects capital even when the setup is real. The numbers are what they are. The framework's job is to tell us the truth before we risk capital, not after. Since every level is defined and the trade is planned, now we manage it. Let's follow the price action from August 22nd through to the close of the period, watching the framework either validate or challenge the trade at each stage. August 22nd through 25th. Following the breakout close at $340, price builds constructively. August 25th opens at $342, our entry level, and advances to a high of $348 before closing at $347. The former resistance zone near $340 holds as support on intraday dips. This is the role reversal principle in action. Pillar 1's key level, now cleared, becomes a new floor. The position is live, and the move is developing. August 26th through 27th, Tesla extends further. August 26th reaches $352, the high of the move thus far, and closes at $352. August 27th opens at $352 and reaches the absolute peak of $353 before closing lower at $350. Target 1 of $350 was breached during August 25th to 27th. The disciplined trader closes half the position near $350, locking in at $8 per share gain. The trailing stop on the remainder is raised to approximately $340, the breakout level. August 28th through 29th. Distribution begins. Sharp red candles with rising volume signal institutional selling into retail demand. This is consistent with one of the false breakout causes discussed before, institutional dynamics working against the move once a natural resistance level is reached. August 28th closes at $346, a lower close. Then August 29th opens at $336 triggers, gapping below the trailing stop at $340. The remaining position exits near the open. The trade is closed. The outcome is not the measure. The process, applied honestly, is the point. This chart is particularly instructive, not because it produced a clean textbook outcome, but because it tested the framework at every stage. From this example, we can draw 3 key lessons. Lesson 1. Pillars 1 and 2 are a filter. Use them. The resistance zone on this chart was not $336 to $338, as it might casually appear. The actual documented resistance was $340 to $344, confirmed by 4 distinct rejections across August 11th through 14th. Pillar 1 demands precision. The level must be tested and rejected, not estimated. Getting the level right determines whether or not your entry, stop, and target are grounded in reality. Lesson 2. Pillars 4 and 5 validate the environment, not just the setup. All 5 pillars cleared on August 22nd. The breakout was real. The volume was genuine. The market context was supportive, and yet the move produced less than half of the measured move target. Pillar 4 and Pillar 5 improve your odds. They do not guarantee outcomes. The underlying driver of the modest move was Tesla's natural 1-hour chart volatility producing a $26 stop, which compressed the reward-to-risk ratio before the trade began. Lesson 3. The RR calculation must be done before entry, every time. Breakout trading strategy concept introduced in our previous video is explicit. require a minimum 2-to-1 reward-to-risk ratio. On this trade, even at the peak of the move, the maximum achievable ratio was approximately 0.421. A trader running the numbers before entry would have either passed on the trade entirely or significantly reduced position size to limit exposure. The framework's purpose is not just to find setups, it is to protect capital by ensuring the risk is worth taking. The 5 pillars all cleared. Pillars 1 and 2 identified the structure. Pillar 3 validated the signal. Pillars 4 and 5 confirmed the context. The execution mechanics governed conservative entry, measured move target, logical stop, position sized from risk, carried the trade from entry to exit. What this chart adds to the education is the lesson that even a fully confirmed 5-pillar setup must pass the reward-to-risk test before capital is committed. That test is not separate from the framework. It is the final gate. That is breakout trading, applied honestly to a real chart. What this chart ultimately demonstrates is that the framework is not stock-specific. The same 5 pillars, a documented key level, a defined consolidation, a volume-confirmed breakout, institutional timeframe alignment, and a supportive market context, apply to any ticker, any timeframe, any market condition. What changes chart to chart is the precision with which you read them, and the discipline to let the reward-to-risk calculation have the final word. A setup that clears every pillar, but fails the RR gate, is not a missed trade. It is the framework protecting capital, which is the whole point. Bring that standard to every chart you open, and the process will take care of the rest. And this is exactly how Positioned.app is designed to support breakout traders, from idea generation to execution and trade management. You can scan your watch list, identify active signals, analyze chart structure inside the full-screen environment, apply technical indicators, and manage risk using a structured workflow built for swing trading. Whether you're evaluating breakouts, consolidations, or broader market conditions, the platform is designed to help traders make clearer, more disciplined decisions. If you found this helpful, like and subscribe for more trading education content. Also sign up for Positioned.app for real-time swing trading signals. Let's make smart trading decisions together. Thank you for watching. Until next time, happy trading!